Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. We're here for Monday market moves, what happened last week in the markets, and what I expect for next week. We're going to go over gold, silver, copper, uranium, oil, natural gas, platinum group metals, platinum and palladium, nickel, and also we're going to hit up Bitcoin. Alrighty, without further ado, let's go to the charts. Probably tell by my background here that we are traveling. The missus and I are down in Mexico in Rosarito. We're going to be hitting the road and going over to the Sea of Cortez, and we're going to be taking a look at some possible properties, lots. We might be doing a little video vlog on it if you guys are interested, so stay tuned for that. Alrighty, starting out as always with the S&P 500 down 1.5%. It looks like we drew a bear flag last week, and it's kind of looking like this is playing out. So you got the pole right here, and then there's the flag, 90-degree angle right there, dropped right back down. Looks like a confirmed breakdown to me. It is pretty exciting to see this finally starting to wash out. So we're down below the 200-day moving average. If we go back over time, whoops, undo that. There. If we go back over time, some major breakdowns right here when it crossed below this 200-day moving average, broke down below there. Same there for the Charlie 19er crash right back there. Looking like we're getting kind of a repeat here. So we're pretty far off its highs. I'd say down about 10% by the looks of it. Let's actually measure it. 9.3%. Yeah, so getting right down there. Not much to catch it after this. I would suppose we've got some support right around here, around 5,400. But I think we've seen the all-time highs here around 6,100, and I don't think we'll see those again for years. And the dollar is down 0.1% for the week. Almost kind of looks like a bear flag for this one as well. Got down pretty low. Spiked up a little bit for the week and then came right back down and basically leveled out flat, down 0.1%. Bias for next week, at least the beginning of next week, is going to be down. Initial support is going to be right back here where this would create like a little triple bottom right there. That would be 103.25. And LQD is finally got a position in this one. Oops, there we go. Finally got a position in this one. And got it on, I think it was Tuesday. Yeah, Tuesday. So, I misspoke last week. Thank you, G Mir and Stoked to Trade. Thank you guys for pointing that out. I said I put a call option on this. What I actually meant was a put. The whole bet on this is that if we think corporate bonds, if we think there's going to be a stock market crash, which we do, then this is a hedge against that. And you can see right here in the Charlie 19er how we had a massive it's a moment in time and you got to pay attention to this thing. But if you're hearing stock market crash in the news, then this bet should do really, really well. And you want a put on it. It's in an uptrend right now. And so as this goes up, I'm actually going to kind of double down on my puts, but I finally got one through. I think it was dated for October of this year. That was the only one that had any volume. But anyways, that's the bet. Is it's a put on corporate bonds, and a lot of these companies have massive amounts of debt, and they this is a way to make money on that. If the stock market crashes, it'll basically balance out your portfolio while everything else is taking a dump. This thing is making you a lot of money, and you can use that cash to buy up cheap shares of Exxon. Alrighty, and gold. This one is absolutely surprising me and killing it. I mean, this is pretty incredible. Up 3.1% for the week, up 1.75% just on Friday alone. So the CPI came in hotter than expected, and we had just a gap up right here. I keep thinking that gold is going to correct back down and just keep getting proven wrong. So never happier to be wrong than when gold is skyrocketing. Now, I've been saying last week and the week before that I thought that there was probably an 85% chance that we hit this yellow bar right here. That chance is getting lower, and I thought that there'd probably be a 1 in 4, 1 in 5 chance that we hit this green bar down here. I think that's closer to 1 out of 5 now than possibly 1 out of 4. And this 2100, which was the triple top of the cup and handle right over here, I thought there was probably a 10% chance that we might correct back down to that. I think that chance is probably closer to 5 now. So the higher we go here, the less likely it is that we hit these down here. I think the scenario that we need to be looking at for initial support now is going to be right around 20, we'll call it 28.75 to like 29.50, kind of in that ballpark. That probably has a, we'll call it 80% chance of hitting. And then these down here are less, and that one's even less. So the higher this goes, the less likely it is to hit these down here. You know, mostly everyone watching this show got in way back here, so you're super stoked, and it just keeps going, and we keep getting doubles. But, you know, if you're new to the show, you know, I don't think now is a time to buy any gold or gold stocks. I think that, you know, I mean, if you want to put in a small position right now or something, but usually when things are skyrocketing like this and you've got RSI right now on the dailies up at 75, it's not necessarily time to pull the trigger. It's time to wait. And, you know, there's always ways to make money. You don't have to make money in gold. You can make it in something else. Like we'll go into some things right now that are pretty cheap that I think have much better risk reward. This one looks fantastic. This is gold divided by the S&P 500. So gold outperformed the S&P 500 by 4.7% this week. Now, what's exciting about this, we're recording this on March 29th. This will go live March 30th. March 31st is the end of the month and also the end of the quarter. So we, I mean, unless this falls 10%, on Monday, which is not going to happen. It's extremely unlikely that it's going to happen. I don't want to sound like it. But unless this, you know, falls 10% on Monday, which is extremely unlikely, then we have a radically confirmed breakout. I mean, we have a monthly breakout on this chart, on this ratio chart, and we also have a quarterly breakout on this chart. So really exciting about that. I also looked at the gold divided by the Dow Jones and gold divided by the NASDAQ. Those are looking very similar. And this is literal visual proof that people are selling general equities and they're moving into gold. So the scenario that we've been waiting for to happen for 4 years is finally happening. Okay, it's here. So be looking for that one on Monday. All right, the GDX is up 2.4% for the week. So pretty exciting. Looking kind of like on the daily, like it's going lower, but then when we look on the weekly, it looks like it's going higher. So kind of mixed signals here. Again, you know, you don't want to make a habit of buying when RSI is 70. That's the time that you should be thinking about trimming. I don't know that I would be selling any gold stocks here. I might be treating this because what's happening here with gold is it's just kind of keeps going and going parabolic. And this was the least likely scenario that I thought would happen. You know, I thought that we'd have a nice little correction down to here, and that just didn't happen. I thought there was a, you know, fairly likely scenario, not super likely that we'd get even more of a correction than that. And that's just not happening. The least likely scenario is that it just goes parabolic, and so far that's what it's doing. So you know, I don't see any purchases here on GDX or GDXJ. I really want to wait for a pullback, wait for some kind of support to come down in here, and that's just not happening. But yeah, we'll see. It is tapping on some pretty good resistance right where it is. See, it's meeting up right back here with right after the run up from Charlie 19er. Hitting right in that same zone. It did pierce through it though, which is nice. So it pierced that balloon bubble. And if we go to GDXJ, this one is also up 2.4% for the week. Not quite as high on the charts as it was back here. And I really don't see a whole lot of resistance on GDXJ up until 63.25. So that doesn't mean that it's a buy now by any means. Yeah, it's just great to see these things are actually taking off. And Gold Royalty Corporation up 5.1% for the week. So had a little, let me zoom in here on the daily. And what we had last week was we had a massive sell-off here. They had their Q4 report come out. Guidance was a little bit less than expected and caused some massive selling. Gave you a little buying opportunity right down here at 130. I thought we might correct back down to that. This week, that didn't happen. It shot back up. And but I mean, things are looking pretty good for this. Their revenue has more than doubled from 2023 to 2024. I believe it was 5 million at on 2023 was their revenue, and it's 12 million for 2024. So that's fantastic. A lot of that is going to G&A. Their G&A was 10.6 million. So I'm not super hot on that, but they have a great management team. So I guess you got to pay for it. I think as Canadian Malarctic ramps up, we're going to, and they start going underground on that, which they've got the royalty extends to the underground project. I think this is going to do great. I think as Varus, Cote, and Borborema start to produce income and start paying, I think this company will do really well. I thought that 2024 was going to be the standout year for this company, and it looks like it's going to be 2025, 2026. And, I think 2026 will be even better than 2025. So I think it's going to be really good. Yeah, but I also do think that it will probably come back down and touch this 130 mark at some point. If we get a correction in gold, which I have been expecting for a while, if that actually does come to fruition and happen, then this should come back down to 130. I think it's a deal now. But I also, looking on the charts here, I think that it will get cheaper. So I like limit orders a lot at 130, and then a stink bid down here at 118, which will probably not hit. All right, and silver is up 4% for the week. So, man, this one was pretty exciting. We almost had a weekly close above 35, and we missed that by 19 and 18 and a half cents there. So let me zoom back out here on silver. And for all the silver bugs, this is just absolute chart porn. If we look back at here, okay, so this is going back to 1980. We have the spike above 35. This is going back to 2011. We got the spike above 35. I got into the weeds here on this one last night. And we've only had a monthly close above $35. So remember, monthly close will be on Monday. Whatever the market closes on Monday, that's our number, right? Well, we've only had a monthly close above 35 two times back here in 1980, okay? And 5 times here in 2011, okay? So only 7 times in history has there been a monthly close above 35 in silver, right? And we've only had a quarterly close. So if we go to the 3-month here, we've only had a quarterly close above 35 one time in 2011. That was this bar right here. And the very next month it ran up to 50. So I'm not saying that silver is going to go to 50 next month by any means if it closes above 35. But what I am saying is that this is a very, very significant level, 35, 36. I mean, every chart guy's got a little different. I just round to 35 just to make it easy. But if we close above 35, maybe, mid, high 35s, even into 36 on Monday, probably not likely. But if it happens, that is fantastic. And that is extremely significant on the charts. And I just wanted to make sure that, everyone keep your eye on Monday on how silver closes and if it closes above 35. All right, now the silver miners, SIL, love this one. Basically flat for the week. I think it was up or down like 0.1% or something like that. It was barely nothing. Might be making a little bit of a bull flag right here if we kind of zoom in on this a little bit. And I've told you guys in the past, I'm not fantastic at betting these bull flags. But it is kind of looking like it's might be ironing out to be one. We got like that and like that. I got to work on my drawing skills. I'd like to see this histogram form out just a little bit more red. So I'd like to see this grind sideways just a little bit more. But looking pretty good. I mean, if silver goes to 35 and above for the quarter, then this should have a nice little breakout. But as far as limit orders that I like, maybe a starter position around like 36, for like 10% of your bet, and then start loading up more down here at 32 and then $30 for limit orders. And SILJ is down 1.4% for the week. So also a possible bull flag right here. I thought about taking profits up here, and I just decided against it. Last time we ran to 35 here back in October, SILJ had a much stronger run. This is going to be my take profits lineup here around 15 bucks, maybe 14.50 or so. There's some pretty heavy resistance around there, and I think that might be a nice little take profit zone. As far as limit orders for the new guys wanting to get into the junior silver miners, start a position here at 12 bucks, then 10.75, and then 9.75, and 9 bucks is your back up the truck. And copper, paging Dr. Copper, is, what is that, up 0.3% for the week. So still, I mean, copper's just in its massive uptrend, looking fantastic, but it does kind of look like it's putting in a topping pattern here. We got a new all-time high in copper, which is fantastic. Hit an all-time high of $5.37. Never happened before in history. Mark your calendars. If we look at the weekly here, though, that is a pretty bearish looking bar on the weekly. So I feel pretty confident. Maybe 75% of the time here, copper opens weaker on Monday and Tuesday next week. So it's probably going down next week. Someone mentioned me about a cup and handle right here in copper, or a cup forming out, and what they're talking about is this right here. I'm gonna lean towards no on this one, and I'm not an expert in this, but see how this has this kind of sharp V right in the middle that in my mind that negates it. You want to see kind of jagged going down and then rounding out a bowl and then going up. So I would say that that's probably not a cup and handle there. I would almost say, yeah, no. Okay. And COP.U up 4% for the week. So this one outperformed copper. Now, a little bit of a bearish candle there on the weekly. And last week, our discount was 18%. And this week, it's only 14.7. So I'm going to get rid of the party face here, and we're just going to make it a happy face. And that is to show that it's still a good deal. It's just not quite as good of a deal as it was last week. So if copper is going to correct back down, this discount will close. But as far as limit orders on this, I kind of like the even dollar amounts. I mean, $7 right here on this has some nice little back support, and $6 is your stink bid way down here. So I think the first limit order around $7 is fantastic. And COPX, our copper miners ETF, down 4.1% for the week. So I'm still selling puts on this, and I think that's the strategy. Thank you, Lobo Tigre. Oh, we got him scheduled for next month, by the way. Oh, and Patty Nickel. We had to reschedule, so he's coming on not next week, but the week after. All right, so still selling puts on this week on COPX, and you really got to pay attention to like where the price action is, you know. So like on Monday, I was looking at puts, and it was only $10 a contract. I mean, like not even worth your time, right? And then as the week progressed, and I got a put in on Friday, like an hour or so before the market closed, and as it's running down, I got that same put 3 weeks out for $50. So 5 times more money just by being a little patient and waiting for the price to roll over. And the strike price I did was 38. So I'm just going to keep running those. So basically, if this executes, I will have picked up 100 shares per contract of COPX at $37.50. So that would be a great entry point for me. If that one actually fills, then I'll do another one even lower and just keep running until I can get 10% of the portfolio in copper. Right now I'm at about 5. I'd like to double that. Okay. So selling puts on COPX. Now, uranium down 0.4% for the week. So just kind of hanging around here at these low 60s. One thing I did notice is we do have, if we go on the weekly chart here, we've got the 200 weekly is rising up and hopefully going to catch it there. We got some really low RSI on the weekly, 29. And on the daily, it's fairly low. It's 39, but it did get down there really low. Easiest way to bet on this, and probably the safest to be honest, is SPUT, SRUUF. This one's down 5.6% for the week. We have a looking kind of like, I was going to say maybe like a bear flag right here. I really don't think so. I'd love to see this thing come back down and trade right in this channel right here, although I don't think it's going to happen. I think fundamentally for this to get that cheap is, I just don't think it'll happen. But maybe it will. Maybe we'll get lucky. But anyone that's wanted a piece of this, you've got an 11.2% discount right now. My kindergarten method of buying when it's at a 12% discount or more, I think this is close enough for government work, and buying now is fine. And URNM, absolute wonderful week, down 8.4% for the week. So $32 is extremely likely to hit next week. Okay, so I would say $32 gets hit next week sometime, probably 85% of the time. So limit orders in at $32. And then also you're going to want one down here at 30. I would say maybe 1 out of 3 times we hit 30. Maybe not necessarily next week, but the week after. What we'd ideally like to see is we'd like to see this come in for a triple bottom right here. Let me get rid of the volume so you can see it better. And so right there, that hit at 31.93. That one hit at exactly 32. So there's probably a bunch of people that had limit orders in for $32 exactly. And you should be another one on, if you want more exposure to uranium, this is the easiest way to do it. Right here, URNM. Limit orders for $32. Maybe knock it up to like 32.05 or 32.10 just to make sure that it fills. But yeah, I think this is fantastic. You're getting it at some great lows. Could go lower, but if it does, then just buy more. URNJ is down 10.8% for the week. So I think we're going to get another hit here on $14, possibly even lower. One of the guys at Silver Chartist pointed this out. If you go back here to March of 2023, and we can see the low was $13 and what was it? $13.66. Well, anyways, I got into the weeds. You're just gonna have to trust me on that one. Anyways, $13.66, and then we go over here, and recently the low hit at $13.67. A penny later, 2 years later. Okay, so technical analysis works. And here's like literal proof of it right there. A couple of years later, just hitting right on the same points. So if you got a lot of this and you just want to get cute, $13.68, right? And hope it hits. But I think it's very likely that it will. So nice one right there. And Uranium Royalty Corporation. So this is down 8.3% for the week. Looking great. I hope it gets cheaper. If you want to get into the weeds and do the same thing with this one again, the number is $1.56.5. Maybe make it $1.57, $1.58. And this might come in for a nice little double bottom. Although right now I think it's fine. I mean, I'm just going by eye, but this looks almost exactly like the 61, almost right in between the 50% retracement and 61.8. Just hitting right in. Do that. There we go. Yeah, right in the middle, right there. I think now's fine. I mean, the cheapest I got it so far is $1.90, and this is cheaper than that. And remember, they got 2 million pounds of uranium on the books. That is worth almost the market cap of their company. So they're basically saying here that their market cap 236 million US. They're basically saying here that all the royalties they got are only worth 20 million or something like that. It's this is a screaming deal, and I think when uranium comes back into favor, this is going to be a really, really good one. And remember, gold is at all-time highs now, screaming higher, right? You can, the guys that have been in gold for a while, you can trade some of your gold stocks for uranium stocks. Remember, the whole point of this thing is to buy on this end of the chart and sell on this end of the chart, right? You can do that right here. Same thing with Uranium Energy Corporation. Buy on this end of the chart, sell on this end of the chart. We're now back down at this end of the chart. So I've got limit orders in here at $4.50 and $4.12. This one is down 10.1% for the week. And this one looks like we got a retracement as well. So take it right down here from the bottom to the top. It fell a little bit below it on Thursday. That looks like a perfect entry, and then fell below it there. So can't go by the retracement on this one, but does look like it's a little bit of a double bottom right there. I might actually move this limit order up to $4.61 because that's where it hit right back here instead of $4.50. And then this $4.12 back here just lines up with these ones right back here. It's this bar right there on August of 2024. Came in at $4.12, so that's what I put this one for. So just lining up with some back support. I think this one's going to do really well because it's American-based. Our politicians right now like uranium a lot, and I think this company will probably be one of the ones that benefits the most from that. And oil is up 1.6% for the week. So I feel a lot better after talking with Rick about this one. Basically, he said, be sure to check out. We had 2 interviews with Rick last week posted on the channel, so check those out. And he basically said that, if oil does drop below this little imaginary green line that we've drawn here and gets into the 60s or even into the 50s, he said they're just not profitable at those prices. And what will happen is companies will gradually go out of business, and then the oil price will go up. So, yeah, I mean, that just kind of gave me more conviction that if it actually does drop below there, we're going to be buying more Exxon and the oil ETF XLE. So it still looks like a bit of a bear flag right here. We want to see this crossover, and then we want to see this histogram start to kind of drop down, and then I think we'll have a bit of a confirmation on that. But that's basically the floor we're looking at, 65 to 67, somewhere in there, and upside to around 75, 78. Okay, XLE down 0.1% for the week. This one looks like it's likely going lower. I drew in this resistance line right up here, and we can see that it just hits many points just going back. There's a lot of price action around there. And looks like it's probably going to go roll over. So you want to get into some oil. This is the easiest beta way to play it, XLE. A lot of this is Chevron and Exxon. And I like this buy point at 83 here a lot. Got down to 84 on this one. And, so didn't quite get there. But I think anywhere kind of in the low 80s on this one would be great. So your first limit order here, if you just want a starter position, is going to be this 200-day moving average, which is around 90. But, I mean, that hasn't been a real good indicator. It's just blown through above and below that all day long. I would prefer to look at these. I'd prefer like around 84, 80, 83. And Exxon Mobil is up 1.9% for the week. So I had a nice little run up. Missed this opportunity down here, although I've got a lot of Exxon, so I didn't really need any more. But when I see that, it makes me want more. But pretty high in the technicals, probably also going to roll over. I suppose we could iron out a little bit of a bull flag right here, but we'll see what the action looks like next week on that. I don't see any buys right now. I'd like to see it correct back down here into the low 100s, and then I think that might create a nice entry point. And fiat is dead. Thank you for the donation, sir. You are a gentleman and a scholar. He wants to know about Athabasca oil. So I asked Rick about this one in the Rule Classroom. You can go to the second video that I posted, basically the video just before this one. And I believe it was at minute 52 or 53, we talk about Athabasca oil. So rather than repeat what our guru said, go back and watch that. And as far as the chart action, this is what I see. If I wanted some Athabasca oil, Mr. Fiat, this is where I would be looking. So we're right up here, kind of up towards the tops right here. So I don't see any buys right now. Look at RSI is 65 and see how it got up to, what is that, 71, 72, and just started to roll over. And then check out the MACD right here. See how it's rolling over? This means it's very, very likely that this is going to continue down. So let's say we had no position in Athabasca oil and we wanted $10 worth, or we'll say $100 just to make the numbers easy. I would get 10 right here at this $5.15, and then I would get 20 right here at $4.87, and then I would get 30 right here at $4.70, and then I would get 40 down here at $4.40, $4.35, somewhere in there. There's a decent amount of support right there. That's how I would play it, and that would get me up to my $100 position or 100% position or whatever you want to, however you want to think of it. But that's what I would do is as this got cheaper and hit each of these support lines, I would get more. And yeah, and it looks like it's going to roll over and get lower because we can tell from the technicals here that it's starting to roll over. So that's what I would do, sir. I hope that helps. And natural gas is up 2.1% for the week. So we are still in an uptrend. This little green arrow seems to be working pretty well. I need to draw this on all the stocks that we own, and then they'll just continue to go up like this. So still in an uptrend. Looks like it's probably going to continue next week. Devon Energy is up 1.7% for the week. Now, this one's probably going to come down just a little bit. See, we got this perfect little Charlie Brown shirt pattern right here. Now that I'm looking at this might be a really good play for some like short dated options. You know, basically run a put here, run a call there, run a put here, run a call there. So if you want any entry points on this, I already have a lot of Devon. I'm not interested unless it gets down here, back down around 30 bucks again. But if you want a position in this, I would wait for the 33.25 level. It's hit that twice recently in the last couple of months. It's probably going to hit it again. And that would be my first one. And then your stink bid down here for $30.39. And Birchcliff Energy is up 6.1% for the week. So shot straight up. I am truly shocked by this one, and Rick is as well, that we found out basically down here that it looks like Carney is going to be Canadians' fearless leader, and their natural gas companies are going up. If anyone can explain this to me, I am all ears. Please put it in the comments below. I don't understand what's really happening here. It seems to me like, if a guy that hates the business case for natural gas, just like Trudeau did, it seems to me like these companies should be doing worse, not better. I don't know. Let us know what you think in the comments below. Anyhow, shot up, no buys right here. We got some serious resistance coming back here of June, July last year. So if anything, I think this is probably more likely to come down, but fantastic to see it move up like that. Pado looks very similar here. We can pretty much get rid of this white line or move it up, right? Blew through that. Pado is up 4.3% for the week. So no idea why this company is doing well under the leadership of Carney, or potential leadership of Carney, but for whatever reason it is. Again, I don't see any buys right now. RSI of 69. I think that, I forgot to put the volume back up. There we go. I think that it's more likely that this corrects back down next week. So if you're looking for some entry points, I really like this entry point of $10.65 and $9.75. Fantastic dividend on this company. And coal is up 2.4% for the week. So looking really good technically here, and I think I may get a little bit more coal. I think coal is 5 or 6% of the portfolio, probably closer to 5 now that we've had this washout. But take a look at thermal coal right here. Close the week at 106.50. Looks like we might have put in a little double bottom right here at around the 100 level on thermal coal. And met coal, same kind of thing, kind of a long double bottom here going back to September at close the week at 175.50. Easiest way to play that is the coal ETF, COAL. And this one, I mean, it kind of looks like a bottoming pattern here. RSI is drifting up on the MACD. So if you ever wanted a position in this thing, limit orders only, not a very big market cap. And I mean, you can see this thing is only $17 a share, and 3,000 shares traded, 10,000 shares traded. I mean, super small market cap. So limit orders only, but I think I may be making one last purchase here into coal. And platinum is, where are we? Up 1.8% for the week. So still same game with platinum and palladium. I like buys around 950 and below. 900 is kind of your sweet spot. On PPLT, the way to do it on the stock market, I like this as entry points as 85. And then limit orders down here, increasing your bet size as it goes down at $82.50 and $80. And then a real stink bid down in here for 75. And I probably shouldn't even have that there because it's not really realistic. I mean, we didn't even hit that until we went into the Charlie 19er. Then Palladium is Palladium is up 2.4% for the week. Same deal, same price points, 950 and 900. And then on the stock market, PALL is the easiest way to do it. It's underneath the 200-day moving average right here. Like that, in that it's more likely to go down next week, I think, than up. Although it is in a bit of an uptrend there. Now that I'm looking at this, I'd say probably 50-50. But either way, limit orders, starter position at 85 and then 83 and 80. And S triple P looking like we might have a bit of a breakout right here. Well, breakout's kind of a strong word. It's up above the 200-day moving average, which is nice right now. And it's kind of looking like the technicals are going to push it up just a little bit higher as opposed to lower. But as far as limit orders, set it and forget it. I like $9 and $8.75. And and that one was up half of 1%. All right, and the Bloomberg, well, that one's also up half of 1%. I think this is going up. I think we're going to move into, like Michael Oliver, I think that we're going to be moving into a commodities bull market, and this one will do quite well. So a lot of you guys may have this Bloomberg here and the commodity index in your retirement portfolios, and this is a real easy way to play it, is the Bloomberg Commodity Index. And nickel is up 1.9% for the week, so looking fantastic here on nickel. We're up from the lows of 15K a ton. We're up over 16,000 a ton. So like seeing that. Easiest way to play it on the stock market is NIKL. So this is a nickel miners ETF. Looking like a little double bottom right here. So I don't know if we've actually finally hit the bottom. I mean, this is the one part of my portfolio other than coal that is just getting smoked. But would be pretty sweet to see. What is that price point right there? So that low is 909, and this one is 908, and that one's 905. So I'll be watching this action on Monday to see if we get a reversal bar going up here, and I might place one more bet on this like I will with coal. All right, and the PIC ETF, so down 2.4% for the week. Still in a general uptrend right here, and this green arrow seems to be being obeyed, which is nice. Like seeing that. Down this week, but I still like waiting for 35. I'd like to see this, despite how much I love this green arrow, I'd like to see this green arrow get broken and come back down to the 35. That would create a nice little buying point, but I wouldn't fault anyone for getting a position now. And Bitcoin is down 2.4% for the week. So I don't really see anything here. Actually, let me update this. Now it's down 4%. I did this last night and it's gone down even more. So looking like it's kind of breaking down right here. We'll probably come back down and hit this trend line, which is around 77,000 or so. Looks like decreasing volume. Yeah, it's probably coming down. So I would expect Bitcoin to break down next week and maybe even touch that white line, but definitely get cheaper than it is now. Alrighty, well, I hope you guys got something out of that. I'll be traveling this next week, so be sure to check out our newsletter. It's a good summary of everything we learned from Rick this week and a summary here of Monday market moves. And it's free, so sign up for it. There'll be a link down in the pinned comment below. And if you like shorts and short videos, be sure to check out our social media. So we got TikTok, Twitter, Facebook, LinkedIn, and Instagram. Mark and his wife, Nicole, have been going like gangbusters on those. We got a lot of content on our social media and getting a lot of positive feedback. So if you enjoy that and you have social media like that, then be sure to give us a follow, and would love to connect with you on there. Thank you guys for always being here. Love you guys. And yeah, stay tuned. We're going to be posting some videos on our travels out here as we're looking for little lots of land down in Mexico in the Sea of Cortez. Be sure to support the show and share this with anyone that you think needs to hear it. It's probably your buddy that can't stop talking about tech stocks. You have yourself a great rest of the day, and we will talk to you next time.